folks. This is Drew Rathiver here with Steve Wade for another quick market update. Just disclaimer, this is not specific trade recommendations at all. Just a quick market overview from two guys working on the inside. They're actually trading a book of clients. So again, this isn't specific trade recommendations. This is just a market overview. So let's go ahead and take a look at what Steve's been looking at, the US dollar, and I was noticing the euro really took off. So what are your thoughts on the US dollar here, Steve?
That's right. I think the dollar, we talked about it in the last video. It's been longer than I prefer to do a video. But the last time we shot a video, I talked about this ABC pattern happening with the dollar and with the stock market also, and all that played out kind of like we suggested that we thought it would. So the dollar most likely has printed an intermediate cycle low 3 weeks ago. And today we're on day 21 and week 4 of a new intermediate cycle. Now, in a healthy market, we would expect a new intermediate cycle to last another 20 weeks or so. These intermediate cycles on the dollar, they last 16 to 24 weeks generally. But in this case, I think that you can see that the dollar, it rallied late last week and it broke the intermediate cycle trend line, and that's your confirmation that a new intermediate cycle has begun. And it looks like to me that the dollar is now rolling over and into a left translated cycle. And so I think we should expect to see the dollar continuing to drop, and which would conversely, Drew, mean that the euro is in should probably rally quite a bit. So things that are sensitive to dollar movements, I think we'll see those things react accordingly. And precious metals, it ought to be bullish for precious metals.
All right, let's go and take a look at your next one. You got the S&P weekly here.
Okay, yeah, I wanted to start off by zooming way out in the stock market to kind of illustrate my point of what I think is going on. The dollar trades in 4-year cycles. The longer term cycles are every 4 years. The things that went on with COVID and whatnot have got that a little out of sync. But I think what we had earlier this month or late last month, Drew, was the bottoming of a 4-year cycle low. So if we can go to the next slide, this is the daily dollar chart, and you can see this powerful rally that the stock market's had out of that 4-year cycle low. And usually you'll see the first daily cycle take out the previous intermediate cycle top in a new, fresh intermediate cycle. So yeah, something like that. It wouldn't surprise me to see the dollar, the stock market rally up to that 6,100 mark or 6,200, somewhere in there. But that said, if we go to the next slide, we are on day 31 of the daily cycle, and these daily cycles in the stock market normally last 35 to 45 days. So we're starting to get late in the cycle. I probably wouldn't think about jumping in here at this point using the leverage that we use in the futures market to put on a trade, a long trade. I would probably just wait until we get a daily cycle low at this point before looking at putting on another trade in the stock market.
What kind of target are you looking at on the lower end? Are you shooting for this like lower channel here, or just kind of more of it in this?
Yeah, maybe not that low.
Okay.
It might not be that. It could grind sideways or go a little lower. Maybe the 200-day moving average, that green horizontal line there, is the 200-day. If it pulled back down into there, maybe a little deeper than that. But I'm not. Probably to fill that gap. You can see there's a gap left there, and probably to fill that gap.
Yeah, that's kind of what I was That's what I was thinking. I was seeing that gap right away, and I said, with the cycle count that you've got here, it's going to probably come back and fill that gap in some capacity.
So we're only in week 6. So, the stock market could enjoy another great rally. I know a lot of people are bearish, but great stock market rallies are built on bearish sentiment. And we certainly had a lot of that. So right now you need to have your bullish hat on, but just be careful near term.
All right, so let's take a look at gold here. You've got, I know you've been pretty active in gold. You've been actually not as active in gold and silver. You kind of cut your run and now you kind of sidelined a little bit. But what are your thoughts on gold?
Yes. So I just talked about why you should be bullish gold, and we talked because of the dollar, and now I'm going to talk bearish about gold. So I'm conflicted about gold. I'll be honest with you. I'm not in gold right now. I wish I was today because that was a heck of a rally that we had. But just kind of like the stock market just did, like we talked earlier with the dollar. Normally, these intermediate cycles will play out with an ABC type of correction into a low. And so we are on week 22 of an intermediate cycle for gold, and that's starting to kind of get late. That an intermediate cycle in gold usually lasts 17 to 23 weeks. So we're only on week 22. It's a little early to have an intermediate cycle low, and probably, what I'm expecting to happen is that people are still too bullish on precious metals. And so we talked about how bearish the sentiment got in the stock market and how that fueled that powerful rally. Probably what we're getting right now are people that have their FOMO working. And the way that the cycles would work is we ought to see a little bounce in gold, like you can see how I have diagrammed on the chart. A little rally, and then that to be followed by a sell-off that would take prices back down to where you have extreme bearish sentiment, and that will create the fuel for the next big leg up in gold. So, of course, maybe we're starting some sort of parabolic move now, and gold just goes straight on up. But right now, based on the evidence, I tend to be a little more bearish right now.
Yeah, I tend to agree. I mean, I'm treading lightly. I'm watching my clients trade it, but we're at these really sustained higher levels. And we are coming into, remember the old phrase, sell in May and go away. I haven't really felt that sentiment too much at all, but we are going into those summer months. So I'm a little, just use caution right now. Like you said, it could go to 3,500 very quickly, and then it could go right back to 2,900. It's just, we're going to, I think, see some possible larger swings coming up. And you can see how these are getting more and more stretched out versus this period back here when it was building up. So the next slide, Drew, and here's where you ought to be thinking bullish. And Drew and I were actually going to shoot this video last night, and my attitude on platinum has completely changed. And if you're a good trader, you ought to be able to change your mind pretty quickly. The evidence can change overnight, and platinum it certainly did. And this is the chart that you're looking at right now is a 17-year chart of platinum. And that trend line has held true for 17 years. Wow.
And today, it broke out above that 17-year trend line. This is a monthly chart, so each one of those candles you see represent a month. And today's the first day we had a close on the monthly chart above that 17-year trend line. So let's go to the next slide. And you can see that horizontal light blue line that we have drawn there. Platinum had a hell of a move today, and it nearly reached that point, which should have some sort of resistance there. And it wouldn't surprise me if there's some profit taking that takes place at that point, and we get some sort of pullback, probably to retest that 17-year trend line. And that would be the point where I would get real excited about buying platinum.
So what is that, about the 1030 area?
Yes.
Yeah, the platinum's been an interesting one. It's back when I first got into business, it used to be the leader. And it used to be about basically double the price of gold, and now it's 1/3 the price of gold. It's pretty shocking to me, with it being that small of a market too.
Right. And of course, a lot of the buying happening right now with gold are central banks around the world accumulating gold right now. Wonder why they're doing that. Well,
Basil.
So yes, we got Basel coming up next month, and Drew and I will talk more about that in a future video. But central banks are buying. Your retail investor like you and me aren't buying yet, so we'll be late to the party. But your return will be much bigger if you're early to the party. And the people that we kind of wait until the coast is clear. We see what everybody else is doing first before we jump in. But that won't be me. I'll be in there early. But this last chart illustrates, though, I want to throw out a word of caution, is that normally between now and the end of June, this is the worst time period of the year to buy platinum. And in 15 of the last 15 years, platinum has declined between now and the end of June. Now, this year could be the 1 year out of the 15 that will turn out to be a loser if you shorted it. But I just wanted to throw a little caution out there that seasonally speaking, this mid-May through the end of June are is the worst time period of the year for platinum. But platinum sure showed them wrong today.
Yeah, sure did. It took off. So, all right. Well, let me go and swing over to my side, and let's take a look at some things I'm looking at. All right, let's go and start up. Steve did the USD, so I'll do the euro. And as you can see right here at the let's just take a look here, 1.11 area. You see this support area, and it's getting ready and has already pretty much kind of taken off. So this was kind of a buying area here that you can see. And in my opinion, it's going to probably looks like to go higher, maybe go re-challenge that 1.15 area. Let's take a look at the weekly as well real quick. So the weekly as well, it bounced. You can see right in this 1.11 area, it came down, tested it, and now it's going right back up. And there's going to be a lot of overhead resistance at that let's just say 1.15, 1.14 and a half area. There's going to be a lot of overhead resistance up there. So we could see kind of an explosive move if the US dollar does continue to go down. Let's take a look at the treasuries. Treasuries, I think if you look at the longer term, and actually this is not the current month. Here's June treasuries. So this is a 30-year treasury bond. If you look at the weekly, actually, it really extended downward. Let's take a look here. You can see this low here at the 111 here. I've been eyeing this. I do have some pretty big clients that trade this, but it is holding this area, and I am kind of expecting to see a rebound in the 30-year. I know there a lot of people I've talked to are saying, we are looking at higher interest rates in the long run, but this is more kind of short term. I'm looking at right now to see this thing bounce back up to the 40-day moving average to about the 115.03 area. But this is the weekly, and again, I saw these two really large extensions. And if you go to the daily, you see daily, it'll probably come right back up to the 113.28 area. But again, we've been extended in this downward trend. It would be nice to see this thing kind of reverse for a little bit. Let's look at the NQ. The NQ, absolutely. I know Steve was participating in the NQ. I think it was a couple Sundays ago, Steve. Right. Yeah, he participated. I'm not going to say what he did. Can't say it, but it was. I think Trump said it actually best. He said, buy the stock market. There's some rumors actually ruminating a trade deal with China, and that's what you see right in here. The results of that Sunday night and that trade deal with China and the tariff situation. Short term, would like to see this come back to the 27.00 area. on a short-term basis because it has pretty much just kind of gone parabolic and would need a little bit of a relief there. Let's take a look at crude oil. Crude oil right now is trending down 62.56. This is delayed quotes, by the way. This is not live. 62.56 right here. I would like to see it maybe bounce up a little bit more, give us $3 or $4 more, and maybe possibly look to get on the short side in the crude oil. And this is June crude as well. What's interesting though is, we're going into the driving season. I think this is kind of an indicator. Like even I just booked some airline tickets this morning to go cross country. I noticed they were significantly cheaper than they should be. So I think the economy is a little bit slower than normal, regardless of what the Fed say. I just noticed certain prices, and you look at crude oil 62.56 right now. Theoretically, in a healthier environment, we should probably be at like 75. So I think the economy is, as a whole, kind of a little bit slower than what they're saying. And I even read an article that people are foregoing their international travel plans this summer and look for people. So look for our parks and recreation areas to get a lot busier because people are staying at home trying to tighten their belts up a little bit as we go through this tariff war and this volatility that we're looking at right now. Last, I'll take a look at silver. Silver is kind of there's not much technical right now. It's been choppy to the right. It's been going between this 30 area and 35, just chop, chop, chop. I know there's a lot of silver bugs out there, very frustrated that it has not taken off and retested those 50, 55 area with gold at all-time highs. But it's been a messy market. So from a technical perspective, I would probably only look to kind of go long this market at this level, maybe not today or right now, but on a dip I would. But it's been relatively pretty choppy, so you really got to stay on your toes and look for those timings like you see right here at this 29.62 area. Be patient for your entry if you're going to go ahead and try to grab some silver. But again, we are going into those summer months, so just make sure you do stay on your toes. So, but that's all I've got to say. Anything else, Steve?
No, Drew. Hopefully we'll have more to talk about this next week, but that's all I have today.
Okay. Well, that sounds good. If you guys have any questions, you can reach out to Steve or myself. We'll be more than to take care of you, discuss risk. I would say that the biggest battle we never talk about is risk management. And that's probably one of the most important parts when you're trading leveraged futures. So if you ever want to have a discussion with us, the stop management, definitely reach out to Steve and I, because that's actually, regardless, what I've noticed over the years, regardless of direction, you can be right in direction. But if you don't have keen risk management, that could be your Achilles heel. And we never really talk about that. Maybe we'll do a session about that one day, Steve.
Warren Buffett, was it Warren Buffett or Charlie Munger? One of them said the number one rule in trading is not to lose money. Do not lose money.
Yeah.
And you can't do that unless you've got a risk management plan in place. How are you going to do that?
Well, that, and then also leaving yourself enough. Another thing I notice a lot is a lot of people are trading with too much leverage and their stops are too tight, and they take, all these small losses that accumulate kind of one big loss. So I really learned to respect, wider stop losses and not being leveraged to the degree that a lot of people do. So, but that's all I've got this week. Like I said, if you have any questions, reach out to Steve and I. And again, this was not specific trade recommendations, but just an overview of the markets. Other than that, I hope you guys have a great trading day.